Hi everyone, this is Josh here. That's with me. Hope everybody's been doing well. Tonight I just wanted to go over a couple of things related to Robinhood and some general market reactions for what we've been seeing the last couple of days. We've been finally experiencing a little bit of pain over the last couple of weeks as we headed into the end of December. It's kind of carried over with a little bit of a hangover into the month of January. But first, here we'll start with an update on Robinhood, and I'm gonna go through the cash flow diagram that I've updated recently based off of the numbers they shared with us just before the end of December, as of the 27th, I think. I'll just pull it up here to share with you. So I'm kind of expecting, if you follow me anywhere or look at anything that I post on Instagram, on Twitter, or here during the lives, I'm pretty bullish overall on Robinhood. Here we go. So this is just from the little video snippets that I put out every now and then. This is the cash flow diagram for Q4, which I know we don't have it yet, but they do give us a pretty good insight onto what we should expect for their earnings. I did adjust since I went on the Robinhood Weekly with Amit and Tanner. I did adjust the crypto amounts here, the OPEX, and then the cost of revenue. Those were the main drivers for the change that you'll see in the net income. Crypto was reduced to 380. How I got to that number, I just pulled the 28 million projected as of the 27th in trading volumes that Robinhood shared with us, and I applied a 0.5% take rate. It was either 0.5 or 0.52. I think most of the month of December they had a 0.55 percent take rate on crypto trading. And I think I saw even as high as 0.59, 0.6 on some of the meme coins. Bonk, I think, was up to as high as 0.6% at one point in December. So that take rate number should be a little bit higher than we were seeing previously. Based on that, I got 380 million for crypto. I kept the 202 in options because they did come in line December with what we saw in November. So that was as expected. Equity was the same in December as in November. It was good because November was a blowout month for them in options and equity notional volume. So that was good to see. So these revenues should match up with what I had previously. Others is still left at what they had for last quarter, although we do expect that to be a bit higher with the introduction of the um, the futures contracts for the presidential election. Um, that came out to 673 million. Then we have the interest revenues. I think this number will also be higher. I kept it flat for last quarter, and also the other revenues. I kept that flat for last quarter based on what they reported in their 10Q. That did bring down the revenue to just under 1 billion. But like I said, I didn't add in the trading of the elections contracts, which was 5 million roughly. So it's flirting with a billion. It could just be under it by a smidge. It could also still come out over it. I don't know how big of an impact the new accounts will be on their net interest for this quarter. Even though the interest rates did go down a little bit, that mostly didn't take place until December. The rest of the quarter should line up pretty well with what we were seeing in Q3. Other than that, though, the OPEX, I brought that down. I was just way off on OPEX. It was really 438. Tanner brought to my attention that the additional contra revenue is really going to be 13 million. So that bumped it up to 451, million in the operating expenses. Cost of revenue also was a smidge lower. I pulled this from last quarter and kept it flat. I think this number could go up. They have been doing a fair amount of advertising and some other promotional type stuff. And then, they've had various conferences and things of that nature, which I'm sure go into cost of revenue, or it's either factored in here or into OPEX. But I think this is a fairly safe estimate. Other than that, Nothing else really changed. Um, but because the OpEx changed, I was roughly overestimating by about 100 million. That had a huge impact on net income. Let's see, net income now is 492, and if you want to figure out what that would be earnings per share, I think they were up roughly 900 million shares, just a smidge lower than that. So you're looking at over half a cent or 50 cent EPS. I get 0.55. It might just be a little bit lower, a little bit higher. I think most analysts are expecting somewhere in the range of 0.43, 0.44 now. I also think they're expecting the revenue still at around 850 million. I think that's low unless they know of another 100 million coming from somewhere in this either OpEx or cost of revenue area. I just don't see Robinhood spending an extra 100 million this quarter versus last quarter. That would be a pretty big jump into some of their expenditures, and I just don't see that much of a jump. So all in all, it does still look pretty positive, even though I changed some of the numbers, and even though the crypto volumes in December came in a little bit lower than I thought, it was still basically on par with what Q3 or November had for Q4, which was a huge month for them. It was 300 or 35.2 billion in notional equity, or sorry, crypto volumes. So that was pretty good. December coming around 30 billion. If you add in the 4 extra trading days that Robinhood didn't share with us because they gave us numbers up to the 27th, 30 billion ish is still a very, very good number. It's still better than entire quarters combined previously. So they had 2 months that were higher than entire quarters for crypto volumes. And I don't think January will see that based on what I've shared so far for the daily crypto updates. It doesn't look like January will be like it was in November and December, which you can't expect that to continue every month, month after month. But I do think with the crypto markets, we'll have these outlier months for Robinhood where, you know, some mania kind of hits with a Bitcoin or, alt season, and their volumes will spike and the revenues will be big in those periods. So can be feast and famine, which I think we see when it comes to analyst expectations. And we'll talk about that a little bit later. But let me drop this one and add to you price targets. So this is kind of what the street is thinking. And I just kind of aggregated into a simple table um, for price targets. And if it'll ever pop up. So what you're seeing here are the price targets of each firm. So JP Morgan, Morgan Stanley, JMP Securities, EBS, on and on. And then I have the average here in the Robinhood neon green color. So as you can see, the current price line, this actually dropped a little bit because I made this the other day. We were below $40 for a little bit today during the freak out, the strong jobs numbers. And we'll talk about that too in a little bit. But as you can see, almost all of the expectations right now from analysts are significantly above the price it's trading at. I don't know if people are waiting for earnings to confirm what they already know to be true, because I would think it's pretty obvious now that Robinhood is going to have a really big quarter and it should be priced in. And I feel like if it was priced in, then these estimates would be a bit lower. I mean, Morgan Stanley has it as high as $55 right now for a price target. And the lowest one that we see is KBW. And I mean, it's still at 38 bucks. So we're not even far from the lowest. And that's kind of the area that I'm targeting to start adding back in. And I'll show you here what I have played this year so far, other than shares, which I still hold. The only thing that I've traded for Robinhood are options contracts. And I've been scaling in and out of the 40Cs for February 21st of this year, just because that's past the earnings day, which we know is going to be February 12th now. So I'll take this out. And I'll share with you just a chart for my options P&L for year to date. And I think what I might do with my trading account this year, and it could be kind of boring, but I'm just so comfortable with trading Robinhood now, is to just see what would happen if I were to only trade Robinhood for an entire year. So you can see here, these I actually sold today, but the number here up top for the P&L for this year on options contracts is still the same. Because I think I closed out like right at the same time today. I think I closed at 450 on those contracts for the hood. And I closed in phase two at 3 this morning just to get it off the book. So right now I don't have any options positions open. But as you can see, I was really killing it as hood bounced up to 43. I actually took this position right after the Robinhood Weekly last week. So I captured all of the run up. Unfortunately, I held a little bit too long, but I went ahead and realized the profits. I'll look for reentry. Probably should have taken it again today when it got down to 39. But I really want to see if 38 will hold, and then go in at 38. I think 36 to 38 is a pretty good area to target for an entry. And I have that here too. So you can look at what I'm seeing. So we'll look at some dealer positioning here. And this is just from Volland. They share Vanna levels, which is more or less the dealer positioning against where people have options contracts positioned. Um, and it's a pretty good visual representation of where people are and where people aren't in the market. Hopefully, you'll be able to see this okay. It might look small. But this is taken from before we had the drop. So really, these positions haven't changed because it's across all expiries. But what you're seeing here are the green levels. These are acting more or less as magnets, um, based on where options and dealers are positioned for those options. So these are the strike prices across the bottom. What you want to see here is a red to green transition over time going up. That's favorable for you because these red bars are admirable. So you're seeing a lot of support below, and then you're seeing a lot of magnetism like pull to the upside, because the positive Vanna, this is where dealers are positioned. The red is like where they're not positioned. So you would expect looking at this this is all expiries up until the leaps. Um, Over the next years, people are pretty bullish on Robinhood right now. Before this week, this actually looks significantly different. We did have some green bars down below the 40s, and we had a lot more red bars up here above the price that it's currently trading at. So to me, this looks like this 44 to 46 range is very feasible if macro holds up. That's a whole other story that we can talk about. And then beyond that, you don't really start to run into a lot of trouble until 46 to 50. And that's where you may run into resistance, because that'll start to break out of the consolidation from IPO, that we'll also look at here in a second. And you start to get into kind of some free air above that 50 level, where you start to get into price discovery again. Um, where I don't think we're going to get back to all-time highs for hood, which was around $85 intraday, anytime soon, but we could see 50 to 60 in the near-ish, next 3 months term. And depending on how the market takes earnings, you think it would be obvious what they're going to be and that they're going to be positive, and that it would be priced in, but that's not always the case. You just never really know. You may assume that the market knows what's going on, but sometimes, believe it or not, you might actually know more about what's going on than the majority of people. A lot of people might not follow Robinhood very closely. And so it may come as a shock when they see EPS of 0.5 and revenues of close to $1 billion. when the expectations a few months ago were $650 million in revenues and an earnings per share of like 0.17. And we're talking about doubling, expectations for EPS, actually more than doubling EPS and bringing in 50% higher revenue. For a company that's trading right now at a PE of, I think it's in the 60s, which isn't crazy for that kind of growth to me personally. You may feel otherwise, but if it's even similar growth going forward, then it's way undervalued right here. And I think it is for various reasons, not just because we had a crypto bull cycle, but beyond that, a lot of the acquisitions they've made, a lot of the assets under custody that they've brought in, and the diversification that Robinhood is trying to, implement into their platform to make it so they weather these fluctuations in the crypto markets a little better. All right. So let's take a look at the chart. Um, this may look tiny. I don't know. I'm going to try it. We'll see what happens. Alrighty then. So this is the daily chart on the max graph for Robinhood. The price line is this green line. You have the 200, the one, the 200, the 100, or the 200, the 50, and the 20-day moving averages in red, yellow, and green. You can see here where we've been chopping in this area is really just the IPO consolidation area before we had the huge tank and the massive bear market leading into 2022, which, when you have a bear market, it's not great for trading platforms because people aren't trading if they don't have money. I was talking about that $50 level because it's, $46 to $50 area when we were looking at the Vanna charts for dealer positioning, because once you get up here above 50, I mean, you don't have but this initial spike after IPO where there is some volume up here. Let's see if we can do the max time frame here. Well, we can look at it here. Here's the volume profile of all the volumes traded. So once you get up here, it's thin. There's like no volume. And a lot of these people were probably long gone who were buying up here. So you're more or less over 50 here. You're in price discovery. Uh, it's just open air up there, kind of like it was down here, which it's filled in a little bit more. But there used to be a huge gap. Yeah, right here, over 25. Once we got over 25, which was here, you can see the volume over here. There's just nothing. It was a huge pocket until we got to 30, 31, and then we started to run into some chop here, and then we started pushing higher just because the market was so exuberant at that point. A lot of people were a little worried because this, it looks a bit like a triple top. The other concern is BTC, and we can look at it real quick. Showing all of the contracts changeovers because this is futures. But you can see BTC looks very similar, where you've got three tops here, and it's starting to look a little dumpy. I think a lot of people were concerned. You're looking at the volume shelf here. This is the opposite direction, where there's a huge gap on this volume shelf until you get to around 80K, where you had buyers and sellers before. And then all the way down to 70 is where you really start to run into a lot of the people who were buying on the way up. But right now, it seems to be holding. We've fallen down to 92-ish, 91 to 92-ish thousand a couple of times when we've bounced. The problem is, the more times we go down there and retest that, eventually it's going to break through. And this is all on the back of just some froth coming out of the market at the end of the year, on top of the interest rates going up. And we can look at the 10-year real quick. And you can see here what happened. Let me zoom out to the daily. You can see here in December, we were still down close to 4, which to me is high relative to where inflation is currently. But since that, December 9th date, rates have really been rocketing, and this is a lot. It has a lot to do with the Trump tariff fears. Whether you believe that's merited or not, I don't think that it's really worth worrying about because we don't know. But the Fed saw fit to really throw some fear into the market with their summary of economic projections in December when if you look at the FOMC minutes from today, they more or less said that it's because of the Trump tariffs and what it'll do, the trade policy, what impact that'll have on inflation. If we do a bunch of tariffs, they expect that to make inflation worse. The other thing is jobs numbers have come in strong. We just had some non-farm ADP data today, and the initial and continuing jobless claims have dipped a bit. So there's not as many people filing for unemployment, and the people who are, um, the continuing claims are going down. So the job market's really strong. And I had four keys, based on that for this year to get over some of this volatility, what the market's going to want to see now that the Fed has stepped into politics. Apparently, they're going to want to see the policy after January 21st when Trump takes office. I don't know how long that'll take to play out. It could be a couple of weeks. It could be a couple of months. But they want to see kind of where that goes. We want to see if he really does, do these crazy tariffs that everyone's worried about. The other thing is we do want to see jobs remain strong. Like we don't want to see the jobs market absolutely fold up like a lawn chair. It's freaking people out now. And I think it's just because of the rate concerns. I think if rates were not accelerating like they are here, as you see, I mean, this is just a quick push up. A slow chop like maybe this back here is okay. But when you go from 3.5 to almost 5 in 3 months and some change, equities are due to freak out. And really, as bad as this looks, equities, if we look at SPY over the same period, it's not that crazy. I mean, here you go from October. I mean, we're basically trading where we were in October, mid October. So even though the rates have rocketed up 1.5%, markets haven't gone anywhere. To me, that's a good sign. To me, that is, you know, the markets, regardless of what rates are saying, I don't think anyone actually believes Trump is going to do these crazy things. I think he'll use it as a negotiating piece. I think he will do some tariffs just like he did in his last term. Um, we've seen Trump for 4 years in office. We know what we're going to get, and the market did okay while he was in office. I don't think he'll do anything to, tank the market. He of all people is one of those like, he really prides himself on the market doing well. So he'll think before he does something that would be extremely detrimental to the market. I think once he gets into office, we get some clarity. Jobs remain strong. If inflation stays in check, it doesn't even have to go down a lot. I think just Trump chilling out a bit on the rhetoric or giving clarity that, hey, we are going to do tariffs on these countries, but here's the rates. And once the market can digest that, it'll move on from it. And I think at that point, we really could rocket back to the upside because this fear, even though the fear and greed index is kind of trending down towards extreme fear, I don't really think it's merited. I didn't think the Fed needed to base policy decisions on what may or may not happen in the Trump administration. They're supposed to be data dependent and they're supposed to be reactionary, but this was very proactive on their part. And not to throw in their face, but they weren't very proactive when uh, they were pumping infinite QE and inflation was ticking up, and people were saying, "Hey, are you looking at inflation? It's at 3%. It's at 4%," and they were still doing MBS buybacks. So I thought, I lost a little bit of respect for them after seeing the minutes today, knowing that Good for them for saying it and being clear, but I don't think they should be projecting out based on something that they don't know to be true. Let's just leave it at that. Anyways, that's kind of my broader market stance right now. I'm not particularly worried about this pullback. I, we could see maybe we'll see. We've already seen a 5% pullback from the top the day of the SEP release. We fell all the way back into the 570s on SPY briefly before it bounced. But do we see 10% before Trump takes office? We do have VIX expiry coming up in a week for the annual contracts. That's usually a pretty big event for volatility. I think this window from mid-January to early February is where we could see a potential pullback that would be 10% on the indices. It's not that far, another 4 or 5%, and we'd be pushing it from where we are right now from the highs. If that were to occur, how would that impact Hood? Well, Hood's been pretty resilient with Bitcoin. Even today with it falling to 92, I mean, Hood had a positive day today, so it does seem to be decoupling, and I think it's because people expect their earnings to be really good. They expect future guidance to be good. They expect the company to do well. And it tells me that they're not that worried about the market because everything about Hood, the market has to do well for them to do well. I think if managers of funds and traders were really concerned that the market was about to just fall off a cliff, they wouldn't be buying Hood. That's for sure. Because Hood is very exposed to market fluctuations when it comes to their growth. And so the other things I got here, this gold line, I called it my golden line in a few of my rooms I joke about. This was resistance for a really long time until we had the breakout in November. And that's when we got those November data. There it is, November 11th. And we knew, or I guess October data. And we saw that, that it was going to probably be a really good quarter for them. And then this just continued into December. We got a pullback for the reasons we've already talked about. But this line that was resistance is still holding up as support now. And this actually looks a lot like Palantir before it broke out. If you want to look at that. I don't have the line here for Palantir. Shoot. Here, we can draw one real quick. Oh, there it is. Never mind. It doesn't look good on the weekly. Or did I move this? Yeah, I think I moved this. Here, see, daily. For some reason, when I show these, it looks different on here than it looks on my phone. This white line has been moved. Either that or the phone drawing just doesn't translate. So this was trading in a channel for a while. Yeah, it's got to be on the daily. Let me go back. Yeah, it's down here. Is this really not going to let me do it? I want to do it. Here, let's just draw. Why will it do it there? Let's just draw a new line. Forget this line. You suck. You suck line. Thinkorswim isn't the greatest when it comes to this. Oh, great. Thank you so much for that. And it's kind of coming back into this line here now too. But it was trading in this channel here for a very long time. And before it finally broke out and took off, it doesn't show up good here. So I'm just going to ignore that. Anyways, it did the same thing where it broke above a channel that it had been in, and then it tapped it a bunch of times. And then after 4 or 5 weeks, it just took off. This setup looks very similar where it broke out, it tapped it a few times, and then it hopefully maybe it'll take off But I think we need a catalyst. I think we need clarity on policy front. Jobs need to stay strong. Inflation needs to chill. Um, and then if we get those things and Bitcoin doesn't completely shit its pants, I think Hood will do very well in the coming months. And I'm looking to re-enter. Like I said, I say 38 just because it would be a retest of this line again. If it gets there, I'm probably going to buy a little bit and just see. Dream would be if it fell back to this 50-day moving average, which is 35, 36 area. That's probably where I would really take a position, like a sizable position again, like I did on the 40 calls the last time it was down in that 36, 37 area. I put in about 100K into 40C. If that happens before earnings, like if we fall back into the mid 30s to low 30s before earnings, I'm definitely slamming in probably my full portfolio back into Hood, just because if EPS is 0.4 to 0.5 with the last 3 quarters being around 0.2, that would put their EPS near 1 for the trailing 12 months, and that would put their PE in the mid to low 30s if that's where the price is when earnings comes, which will be a steal for a company that's growing at greater than 30% quarter over quarter, not even to mention annually, because the comps for them annually are still super favorable right now. I think they were just barely break even when it came to income and earnings per share this time last year for Q4. Let's see, is there anything else we want to look at? I don't think so. I think that covers it all. I got over, mixed in there my market thoughts on why we are where we are and where we're going. For Hood itself, my price targets, I already told you kind of where I would target entry, but to exit, it would be that $46 level. I would start to scale out. And then I would start to look, I'd start to look again, at 50, I'd probably take some more outs. And then I would let the rest ride with a stop at 46 if it were to come back to it, because things could get really weird over 50. There's a lot of positive Fana above 50 up to 60, and there's like no negative Fana levels where dealers are positioned up there. So you really could take off 60, as crazy as it sounds, because from 40 it's a 50% increase in the share price. Really wouldn't be, out of this world for it to happen. I mean, we saw with Palantir, to me, something even crazier, because at least with Hood, as crazy as it seems to be trading, if it was trading at 60 at the end of February, its PE would still only be around 60, which is very high, but they are also growing very fast. Their net income is going to be 100% higher than it was last quarter, as crazy as that sounds. So a PE of 60 for a company who quarter over quarter just grew net revenue 100% is not an insane thing. And I think that's why this price is holding up so well right now, even with the market being down the last few days and with Bitcoin being down. I think people know. I think this is just accumulation up here above 38. I don't know if we'll see under 38 again before earnings, but if we do, like I said, throw some money at it. I'm definitely going to take a position if that were to occur. All right. Well, that's all I got for tonight. Covered the charts I wanted to. Oh, one other thing I did want to share, and I may do some more videos kind of based around this that are not Hood, because this is just for my IRA account. Like I was saying, I might just trade Hood this year and only Hood, but that would be in my brokerage. For my IRA, I shared this today, and it's just the breakdown of allocations. This is how I have it allocated so far. I've only put in about $1,000, but I do have, I'm going to put in the full 7,000 for this year. And I'll probably change these ratios. I've been adding to things like Palantir's 18%, but that's just because it's in the middle of like a 10% pullback. So when I see big pullbacks, what I'll do throughout the year is just allocate to those positions in these stocks. I don't really care to have a particular percentage of either any one. I just really like the companies, and like I said, I think I might go through these and tell you why each one of these I'm targeting. But yeah, those would be later videos. But these are the 10 I'm going to do for this year. Next year I might do a different 10, and the year after that I'll do a different 10. Some of them maybe some overlap, but right now these are just the ones that I want to play for 2025 and see how it turns out. Kind of as a fun experiment. All right. I didn't really have anything else other than that. So thanks for joining. If you watched or will watch, I appreciate your time and happy trading. I'll talk to you later.